Hello guys, welcome to the Nailing Forex and Crypto. Hopefully it's obvious what we're going to be covering. What markets we're going to be looking at is the Forex markets and the cryptocurrency markets. Now let me just make sure that we display the disclaimers. Top left hand corner, please read them. I won't read them to you. So if you need to pause the video in order to make sure that you do read them properly, by all means do that, and I won't I won't have a problem if you pause it, if you interrupt what I'm saying or something like that. Okay, so with Nailing FX and Crypto, we will be looking at Forex currency pairs and cryptocurrencies that we could be placing trades on. We tend to focus mainly on the Forex side, but of course I will take suggestions as well. So anything that you guys want to look at, you just let me know in the chat boxes. I will be looking around to the different chat boxes. So you guys just let me know what it is that you're looking for, and I'm happy to go and look at whatever pairs or cryptocurrencies you want me to look at. We'll look at the current market environment. We'll look at some trades that we placed last time that have closed so that we can see what happened. Did they win? Did they lose? Did they break even? Did we cancel them? Why did those things happen? So we give context to trades that have already happened. We'll talk about trades that are currently open, not yet closed. And therefore, what do we do with them? How do we manage them? And then we'll look at some new opportunities as well. So what we'll do first, I will just take you to this link here, which is tradewithufos.com/Becky. So let me just put that link up on the screen if I can get it. She says, if I can find it, there it is. So tradewithufos.com/Becky. From this link, you can get different platforms and apps. You can get one-on-one coaching with me directly if you'd like. You can also log in here for free and you can ask questions here, which is great. You can always email me if you have questions, but by posting your questions in this public area, it means other people can see the questions and they can see the answers, and we all benefit from being able to see what's going on, transparent with everything, kind of like a frequently asked questions section where other people can go to get their questions answered as well. Now, like I said, if you don't want to do that, you can always email me. I never have a problem with that. So that would be becky@traddictiv.com. That's my email address, and you can use that as well if you'd like to get hold of me or if you have any questions. Okay, so what we're going to do now, let me just bring up my log here. We are going to make sure that we cover the trades that we placed last time so we see what happened with them. I'm also just going to check chat boxes as well, make sure I've got everything up and running. I don't want to miss any questions that you guys have, so give me 2 seconds just to clarify that. Okay, cool. So like I said, let me know in the chat box if you want me to look at anything in particular. Use this time as I'm going through trades that we placed last time to let me know what you want to look at for upcoming trades. Okay, so last time we placed a trade on the New Zealand Swiss. This was using a weekly chart on our left-hand side and a 144-minute chart on the right-hand side. If we use the weekly, it's easier to see what's going on here. If I space this out. What happened here is that we placed the trade. The black line was our entry, the red line was our stop, and as you can see, price came close but never entered us into this trade. It's now since moved away, so we're now going to cancel this trade. No trade anymore on the New Zealand dollar Swiss franc. We also looked at the Canadian yen. Let's have a look at what happened there. Canadian yen. This is going to be a similar situation. We can see easier here on the weekly. We placed the trade around about here. Price never came back to us, moved away, never hit our entry line. So now too far away, we're going to cancel that trade as well. So easy so far. 2 trades that we placed last time that we're simply cancelling. This will also be true, I believe, of our next one. New Zealand dollar versus the Canadian dollar. Here we had, and this will probably be easier to see on the 144. Here we had, so this was at the time I'd placed the trade accidentally and then cancelled it out. That's what those arrows are showing us. But we never entered into this trade. The black line was the entry price. Price never came back, got to here, came down from there, but never hit our entry. So again, cancelled trade, too far away now, no need to be in it. So now we can look at some trades that actually did trigger and what happened with them. The first one is a losing trade, I believe. The Canadian Swiss. We placed the trade here on the 5th of January. So round about this point. Price then came and hit us on the 6th of January. At that time, we still had a thick red dot. We still had the EMA where it should have been. So we still would have been in the trade, and price just moved straight through, stopping us out, making us lose. So we took a loss on that trade. Now we also had another trade. This one was on FXCM, I believe. Another trade on the pound Aussie. Now this one did work in our favour. We placed it on the 5th of January. It triggered on the 5th of January. So it hit us here. Then moved away, hit our first target, and then hit our second target. So it went in our favour, very nearly hit our second target, came back against us, went back again, hit our second target. Lovely, happy days. All the while we would have stayed in the trade because the climate stayed where it should have been. So we took a full profit on this trade, which for us is $215 it would have been in total, because we risk 100. But if you'd have risked 10, it would have been $21.50. If you'd have risked 1,000, it would have been $2,150. It's all relative, of course, as to how much you are risking as an individual trader. So a profit on that one. So we took one loss and would have lost $100 for us, or the equivalent. Again, it could be more or less than that, depending on what you're risking. For us, we risk $100 on every trade just because it's a nice, round, easy number. So we would have lost $100, but then we would have been up $215 so far from the trades we placed last time. And then we had the Euro Yen, which was the final trade that we placed last time. This one, we would have closed this at a small profit. So let me show you what I mean here. So we placed the trade on the 5th of January. It triggered on the 14th of January. So when it triggered, we still had a thick blue dot. We still had the EMA where it needed to be. We would have stayed in this trade. It then moved away and it hit our final target, hit our safety target on the 17th of January, early in the morning. So unless we'd have been watching this, because on the 17th of January, in fact, we can go back in time and see exactly what it looked like on the 17th. So on the 17th, we still had a thick blue dot. So we would have stayed in that trade. We would have hit our first target. On the 18th, price then came against us, but still thick blue dot, we would have stayed in the trade. So far, we've taken half the trade. Today is now the 19th, and we've now gone to an unconfirmed climate. So we would be closing out this trade. Let's say now is the time that you're looking at it. You would close it right now, whatever the price is right now. Now the price is currently 129.85. So let's say you closed out right now. What that then means is you would have taken a small loss. Your remaining risk here would have been $50. So that might be $10, $15 maybe of risk. So you would have taken a $15 loss, but we've already hit our first target. So we took a $50 profit. So overall, it would be $35 to $40 in profit overall from this trade. It's a small amount, but it's not a loss. We like that. So just had a phone call distract me then. Sorry about that. So overall with this one, we would have closed out early on the second target, but hit our first target. Overall, a profit of around about $35 to $40. It would depend as to exactly the price that you closed out as to what that would be. Either way, should be at a profit. Okay, we then had two open trades that are still in. So this is the New Zealand Swiss. So this one, it looks like that hit our stop loss there, but it doesn't look like it actually triggered. So that went in our favour. Just have a look here. Yeah, so by the looks of it, oh no, we got stopped out here. Okay, in which case we have a break even on this trade. So we placed it on the 29th of January. Sorry, 29th of December. It's not the 29th of January next. So we put the trade on around about here, triggered around about the same time. We've had thick blue dots the entire time, so we'd have been happy with that. Price then moved in our favour, hit our first target, moved against us, and hit our stop loss. So overall, we had a break-even trade on this one. So break-even on that one. But not a win, what a loss, not a loss. We made 50 bucks, we lost 50 bucks. Overall, nothing to be said there. And then we had the pound Aussie, different trade. We placed a one on that one before. This one is still open, and it is, get rid of that, on its way, hopefully, to our final target. So we used a daily on this one. So let me have a look at this. This was a 1 day on the left and a 6-minute on the right. That's what we were looking at here. So again, we got into this trade 29th of December. It hit our entry there, went off, hit our first target, and it's still continuing upwards. Hopefully take us right the way to our second target. Unlikely for that to happen. In the meantime, we will probably have a change of climate and we'll get out then, but more than likely at a decent profit. As an example, if we were to close out right now, then the second half of this trade would have been an $800 odd profit, plus the 50 bucks we would have made on the first target. So overall, you could call it between $800 and $900 overall. We're likely to take out of this trade if we see a change in climate, if it continues up, an even greater profit, but we will see. Currently open. Okay, so we had lots of trades to go back and look at. Let's now look at some new trades. Now, first things first, we're going to come to the FX Street economic calendar. We are going to filter by the main currencies that we trade. So that's the US dollar, the British pound, Japanese yen, Swiss franc, New Zealand dollar, Canadian dollar, Australian dollar, and the euro. We're going to filter by high impact news. Basically, what we want to know is what scheduled news reports are coming out within the next week or so that could impact these countries and therefore these currencies. So, for example, having a look at that today, we can see that today being Wednesday, January the 19th, we've got some news coming out later on in the US evening on the Australian markets, which could affect the Australian dollar. Tomorrow, we have some news in the evening US time on the Japanese yen, or Japanese markets. Friday, we've got some news earlier on in the morning US time that could affect the euro and the Canadian dollar. The good thing is we're not seeing a lot of doubling up. So it's not like we have Aussie dollar, Aussie dollar, Aussie dollar, or euro, Japanese yen, euro. We're seeing different currencies being affected. So over the next week or so, different currencies are affected for different things. On Wednesday, we've got quite a lot coming out for the Canadian dollar, quite a lot coming out for the US dollar. So be aware of that next week. In the meantime, I'm not too concerned about any of these things. Obviously, today we've got some news out on the Australian dollar, so perhaps we'll avoid that. But we could just reduce our risk or make sure that we don't place more than one trade on the Australian dollar. Right, so now what I'm going to do is come to Tradestation and use this to help us figure out where we should be looking. Now, we are using scans to make it easier. We could just go through a list of currency pairs, start to finish, look at different timeframes and see what we've got available to us. Or we can use technology to make that quicker and show us where it's worth us looking. That's not to say that this scan tells us, hey, trade this, place this trade. We still need to go and apply our process. But what it does do is show us where it's worth looking because some of the process is at least checkmarked already. So we want to look for sensible trades. So we've got these near boxes, those are the yellow boxes. Some of them say sensible, some of them say hopeful. We want just the sensible ones. And we want the ones that have either red or blue boxes in this section that we're looking at, or this column. So we will start with the US markets and then we'll look at MetaTrader to see what we're looking at here. And we'll start with bigger timeframes if we can. I prefer to look at bigger timeframes with Forex because the bigger the time frame usually, the more accurate or the less likely we are to lose, basically. That's not to say that people don't do well on smaller time frames. It's just the smaller the time frame, the smaller the wiggle room, the more likely you are to be stopped out by things like the spread or news. The higher the time frame, the less likely you are to have that happen. So we've got our daily time frame, and the only one on here that gives us a decent opportunity is this one, the second one down, New Zealand dollar. Daily on the left and therefore 55-minute on the right if you're using TradingView or Tradestation. If we're using MetaTrader, which we will be, then it will be a 60-minute chart on the right. So we want daily here and 60 on the right. Okay. By the way, we might move up a time frame and have 60 minutes or a 4-hour. We'll decide that if we see if we've got an opportunity. So New Zealand dollar on each of these, and then we'll see what we're looking at. Okay. Oh, it's loaded strange, but we should be able to still see what we're doing. I don't use MetaTrader, to be honest, myself. I find it not very user-friendly compared to other platforms that I use. So apologies if I'm a bit clunky using this. Okay, so we have on the daily chart of the New Zealand dollar, we have a thick red dot, probability down. That's our auto climate telling us we should be looking to sell. If it's a thick red dot, we should be looking to sell. Simple as that. If it's a thick blue dot, we look to buy. And if it's a thin dot of either color, we do nothing. So we've got a thick red dot in this case, we look to sell. Where do we sell? We sell where we have these red UFOs. Which one? We pick the one that coincides with the EMA value on the left-hand side. So the EMA value right now is about where current price is right now. So the EMA value is 0.67, if I pause this, is 0.6799, which is literally 1 pip above us. Now, unfortunately, we do not have a red UFO around that price. We have one a few pips above us, but that's not relevant. We have to be strict. If we're going to say, oh, it's only a few pips away, how far does a few pips stop? We have to be strict on saying it's not within that UFO, therefore it does not line up, therefore we do not place the trade. I know that's harsh, but it's the way it needs to be. Otherwise, what's the point of having rules? We'll check our 4-hour chart, see if there's anything there. We don't have anything there, so no trade for the New Zealand dollar for the time being. We can now come back and we'll look at some smaller time frames because we had nothing left on the daily. So we'll look at some smaller time frames where we'll have the 4-hour on our left-hand side. We will start with the dollar Canadian, the US dollar versus the Canadian dollar, which is what we have here on the 240. So let's check that out. There we are. So we'd have 4-hour on the left, and therefore we would normally have the 21-minute on our right, but we are going to put the 30-minute in. We can use the 30 or the 15. We'll check them both. And we're looking at the dollar Canadian. It's going to take a sip of water while that's loading. Okay, looks like we had a decent gap here in the dollar versus the Canadian, which, that's weird that did that, but okay, it seems to have synced itself. We've got the 4-hour on the left, US dollar versus Canadian dollar, 30-minute on the right. Let's see where we're at in terms of the moving average. Our moving average, which is there right now, is 1.25 almost exactly, which is here. There are no red UFOs around that point. So let's check the 15 minutes and see if that changes anything. Brilliant. We do have a red UFO right there on the 15-minute chart, so we will use that now for our trade. Now, what we're going to have to do, more than likely, yes, definitely, we are going to have to combine all of these UFOs together. The reason for that, so excuse me, the reason for that is because they're basically one after the other. By the time you've rounded up the pips on this one, you've fallen into this one. By the time you've rounded up the pips on this one, you've fallen into this one. You don't want to be buying in the middle of sellers. And when we're selling to enter the trade, which is what we'll do here, the only way out of that trade is to buy. So if our stop loss was here, right in the middle of a bunch of sellers, we'd be buying amongst sellers. We don't want to do that. We want to sell with sellers. So we're going to combine all of those together, providing we have the room, which it looks like we do. So we can see here that our closest stack of buy orders is all the way down here at 1.2157 it would be by the time we've rounded it up. So I'm going to make a note of this. and we are going to take the data as MT4 gives us, or MT5 gives us. So the date today is the 19th. Get the date. We are in the live session. US dollar, Canadian dollar. We are using the 4-hour and the 15-minute. Going short. The entry is going to be current price. That's because we're within this UFO right now. So there's no point selling it cheaper than what it is now. We're going to sell it whatever it is now. So that will probably be around 1.2496-ish. The stop will be 1.25. See, it says one up here, 1.25248. We'll round that up to 1.2525, add 7 pips. That's 5 for wiggle room and 2 for the spread. So that will take us to 1.2532. We'll work out our target 1 in a second. Our target 2 will be 1.2157, which is taking the start of Tradestation for letting us know you're open there. The start of this UFO, which is 1.21547. Round it to the closest pip and add a couple. Okay, so I'm going to go to TradingView to complete this, just because I find it so much easier to place trades through TradingView, and it's easier to explain to you guys what I'm doing. So this is the US dollar, Canadian dollar. We had our 4-hour on our left, 15-minute on our right. The numbers might not add up exactly, might not be the same thing, so I'm actually going to hide the UFOs here, and I'm going to hide the UFOs here, because we are going by the metatrader data. Because if you're trading through metatrader and that's where you're placing your order, doesn't matter to you what other brokers show you, doesn't matter to you where UFOs are with other brokers. We care about the pricing data that's coming from our broker. So we're using this assuming that you guys are using MetaTrader 5 to place your trades, and therefore what happens on other brokers is irrelevant. So I'm just going to draw this on the chart here from wherever we are, so that I can type in what we're doing. So our entry price was 1.2496, or whatever price is now, is about that. Our stop loss is 1.2532. We're going to find out our first target straight away, which is going to be 1 to 1 away, always is. $50 worth of risk. That then tells us we put in 1 to 1 away. 1.2460 is going to be our first target. 1.2460. Brilliant. And I'm going to place this half of the trade. We should get in it almost immediately. Our second target was down here at 1.2157, which is quite a way away. So we're likely to close out sometime before then. Likely something will change before we actually hit our second target. If it goes all that way, brilliant. We'll be happy with that. But no point doing that. Yep, that's about right. No point doing that and just holding on and hoping that it goes there. If things change in the meantime that take our probability away, then we will close the trade out early. So this was placed live session on the 19th of January 2022. Nothing really special about this other than 4 hours and 15 minutes MT5 data. Okay. So that's our first trade that we put in here. So our first target there, just for my records, is that. Okay, so let's come back to Tradestation and have a look at the next one, which is the dollar yen. We'll see what we've got there, and then we will run out of available US dollar trades. We'll then move on to TradingView only to do our analysis on our cross bets. So having a last look at the last major that we have access to, is the dollar yen. So let's move into that. There we are, dollar yen. So again, it will stay with our 4 hour on the left, and we will look at the 15-minute and the 30-minute on the right. We'll cycle through, see what we've got. It looks like our moving average price is 114.50, which is 5 pips above where we are now. So there's no UFOs around us there, and I doubt there would be on the 30 minutes either. I stand corrected. I stand corrected. Let me see what we have here. 114.50, which is within here. Yes, it's within there. Brilliant. So we will. Okay, here's where we have a problem. So remember on the last one, we took a bunch of UFOs that were near each other and we grouped them together. We grouped them together because we don't want our stop loss, which in the case of going short, a stop loss is a buy order. We don't want our stop loss falling within sellers because then we're buying in the middle of sellers. We want to give those sellers chance to push price down, which is what we want to happen if we're going short. Now, if we think about it this way, so if our entry becomes 114.48, so around about there, and we group everything together, thank you, Tradestation. Let's come back to this. If we group everything together, okay, so let's say our entry becomes round about here. Our stop loss, if we take this, we've grouped all of these together, which we would have to, our stop loss would become 115.39. 15.39, which is all the way kind of here. This then becomes our entire risk at the bottom. We place our second target where? The closest stack of buyers on this time frame, which is here, which means our risk to reward is skewed. We're risking more to make less. We don't want to do that. We don't want to risk more than what we could make, because then we have to be right a lot more often in order to actually be profitable in the markets. So unfortunately, we won't place this trade, not because we don't have most things lining up, but because we don't have room to take this profit as far as we would need to. So no trade there on the dollar yen. Okay, so that's the end of looking at our US dollar pairs. We're now going to come back and we're going to use TradingView. We'll still use Tradestation to show us where we should be looking on the right hand side, but we'll use TradingView to have a look at our cross pairs. So with our cross pairs, it looks like we've got a few decent opportunities. We've got these three. We've got this one, New Zealand yen. I'll do that again. And we've got these two. We've got 6 on our bigger time frames before we've even looked at the smaller ones. So we'll start top to bottom and we'll have a look at the Aussie yen first. Daily on the left hand side, 55 minute on the right. So it was Aussie yen. I use Oanda data not because I have any bias towards Oanda, but because they will share the same data that Tradestation does. So we should be looking at the same thing. So daily on the left, 55 minute on the right, but we will also look at a 60 minute if we can't find opportunities. And we're going to show our UFOs now. Okay, so on the Aussie yen, on a daily chart, we have a thick red dot, probability downwards. We want to be looking to sell. We want to sell where we have red UFOs, because those are where we have lots of sellers. We want to sell with lots of sellers. Where do we do that? Where it coincides with our EMA, which is 82.79. Now that is just above where we are now, and there are no UFOs around that area. So no trade on this time frame. What I'm going to look at is a 60 minute to see if anything changes there. And we don't have anything there either. So no trade on the Aussie yen, no problem. We've got other opportunities. And notice as well that when we're looking through this, as I load the Swiss yen, as we're looking through this, it's very mechanical. It either fits the rules or it doesn't. We don't force trades just because we want to place them. There's no point placing trades if you're likely going to lose them. No point. We want to make sure that we're only ever placing trades because we have probability that it will work out for us. So just to come back here, we're looking at the Swiss yen now. Thick red dot, probability down. We want to look to sell. We want to sell where we have red UFOs that coincide with our EMA value, which in this case is 125.13, which is about there. Nothing on the 55 minute chart that shows us that. If we look at the 60-minute chart, we have a bunch of UFOs next to each other. We'd have to combine them all. We will see if that's going to work out for us. So these UFOs definitely work in the sense that our EMA does fall inside them, which is great. Now we'd start with 125.11. So I'm just going to make this big so we can see what's going on. 125.11 is going to be our entry. Our stop loss is going to end up being 125.87, which is going to be somewhere in here. That works because this will be our risk. Our reward will be here to here. So our reward is greater than our risk, therefore worth doing. Okay, so let's place this trade. I'm going to group these together with our entry price being 125.11, our stop loss being 125.87. I've just added a couple of pips there for the spread and 5 pips for the wiggle room. So, on my notes, I want to make sure that I've always got a note of what we place, what's going on, so that we keep on top of everything and we know how we're doing. I would always suggest that as well to any trader. Keep a log yourself that's separate from what your broker or platform does for you. Lots of people will say to me, oh, I don't need to do that because my platform keeps a log of all of my trades. They might, but it won't keep a log of why you place the trade. And that's what's most important then. We want to understand, why did I place that trade? What was going on? Was it short? Was it long? Was it however many dots on auto climate? Was the EMA just inside or far away? Whatever it is. By logging those kind of things, we'll start to get an idea of what works for us and what doesn't. What trades work out better for us and therefore what we might risk more on, things like that. So always keep a log that's separate. So our first target will be 124.35. Place that. And our second target, so same entry, which is 125.11, same stop loss, which is 125.87, same risk, which in our case is $50. For you guys, it will be whatever you want it to be, and same final target there. So let's put a little note so we know what's going on. So placed on the 19th of the 1st on the live session, 1 day, 1 hour. Brilliant. That's our second trade of the day. Let me just make a quick note here of my targets. Second trade of the day, we'll come back to Tradestation to show us some more opportunities. So we looked at the Aussie Yen, there was nothing there. We looked at the Swiss Yen, we just placed the trade. Now we're going to look at the Euro Swiss. So Euro Swiss. Daily chart on the left, and we'll look at the hourly and then the 55-minute on the right. So we'll start with the 55, prefer the Fibonacci timeframes if we've got an opportunity. If we don't, we'll look at the hourly to give us a second option. So thick red dot, probability to the downside, we want to sell. We want to sell where the EMA price coincides with the UFOs, which in this case, it does indeed. We've got our EMA that sits in there within this stack of UFOs again. We're going to use all of them together. So our target, it looks like we won't have a second target on this one. We will have a trailing stop. No problems. That gives us some room as well. Other way around. The red line is the stop loss, right? So I always draw on here. I use the Fibonacci retracement tools, not because I actually are using them in the way that they're intended. I'm using the Fibonacci retracement tools just because they enable me to draw what I want to draw so that I can see exactly what's going on. 53. I can see exactly what's going on, what my entry and stop looks like, what my targets look like. So it's easy for me to see visually next time I come back what happened and where it happened. So it is 1.0453. That's going to be our entry to stop loss. Therefore, our first target is 49 pips away. which is 1.0355. Put that in. Now our second target, 0.04. Same stop loss, same risk. Our second target, we're just not going to press take profit. We're just going to put in an entry and stop. Then as price moves in our favor, and then we get a new UFO form. And then we take our stop loss from here and we put it here. Price continues, new UFO forms, we take our stop loss, we trail it down. Also, we would get out of the trade if we have a change of climate. Okay, so that trade has now been placed. Let's make a note of that. So placed 19th January 2022, live session at 1 day, 55 minute, and target 2 is trading. And we do that, we make a note of it just because it's so much easier to keep on top of what's going on, so that next time we come back, I know at what time frames to look at, and you guys know what time frames to look at to keep it all making sense. So let me just put this in here. So 1.0404 was our entry, 1.0453 was the stop, 1.0355 was our first target, and the second target was trailing. Okay, back to Tradestation to look for a new opportunity. The next one on Tradestation that we can be looking at, interesting, it's the Euro Swiss away from there, probably because the price moved a little bit away from the EMA. We've got the New Zealand yen. So let's check out the New Zealand yen, and then we'll come down and have a look at these two. So New Zealand yen, and so much more efficient than going through each individual time frame, each individual market before we decide what we're doing. So thick red dot, probability down, we want to sell. We want to sell at the EMA price that coincides with the UFO. The EMA price is at 78. There's nothing there on a 55 minute. Let's check the hourly, see if we've got anything there. Nothing there, unfortunately. So again, the EMA number is here. Outside of this UFO, not lining up, no trade. Back to Tradestation. So we looked at the New Zealand yen. We're now going to look at the Canadian yen. So let's take a look at that. With the Canadian yen, it looks like we'd be looking to go long on this one. Okay. Great, looking good. And with this one, we don't actually need to combine them. They're close, but not close enough. We have, in fact, let me try on the 55 minute first, because we prefer that if we can. Have to combine these ones. I'll tell you what, we'll use the 55 because we prefer that. It normally gives us better probability. So we have a thick blue dot, probability upwards. We want to buy. We want to buy where the EMA, which is 91.32, falls inside a UFO. These two are close enough together that we will combine them. Our stop loss will be somewhere here. So that's what we're going to do. So in this case, our entry is 91.46. Apologies, it's going to be 91.48. I'm going to round it up by a couple of pips. Our stop loss will be 91.03. Rounding down that number and minusing 5. So that's our entry and stop. Another good thing in our favor, it's also partly within a bigger stack of buyers, which is good for us. We've also got some room in our auto climate to take it reasonably far. We have no second target, so we'll have a trailing stop on this one as well. Okay, let's make a note of these things. So this is Canadian yen. This is 1 day, 55 minute. This is long, 91.48 to 91.03. We'll find out our target one in a second. Second one is trailing. Okay, 91.48 is the entry. 91.03 is the stop loss. We'll risk $50. Again, you guys risk whatever you want. We put in $50 per half of the trade, so $100 in total, just as a nice, easy round number. We've got to show you something, so that's what we picked for that reason. So our target one is 91.93. Is that trade? Okay, the second target is trailing, so 91.48 is the same entry, 91.03 is the same stop loss, $50 risk is the same, and we will just not tick take profit. And again, in this case, price comes up and creates new buy UFOs. We take there. We take our stop loss from here, we put it underneath here. Equally, if price goes in our favor, but the climate then changes, we would then also cancel that trade at a profit. Let's place a little note. So, placed on the 19th January 2022, we are using the 1 day, 55-minute, and target 2 is trailing. Okay, we're on a roll. We've placed 4 trades so far today. Let's see if we've got anything else. So Canadian yen we've just placed. Let's take a look at the pound New Zealand. And we've still got a whole other time frame to look at as well with this one. Pound New Zealand. Okay. 32. Okay, so thick blue dot, probability upwards. Something to be aware of here, and let me just make this bigger if that helps me to make my point. I think I might need to move it there. Okay, I'm just going to close this for a second so I can make this point. Okay, so you see we have some figures here. Let's go back to current price there. We have some figures here. Why are those figures important? What these figures tell us is how long that market usually goes up for, how long it usually goes down for, and how far it's currently been going in its current direction. So for these purposes, we don't care about the middle number because we're looking to go long, right? It's thick blue dot, probability upwards. So we want to know, based on what usually happens, how close are we to being in a position where we have more probabilities. So usually the market would go up for 5.05 candles. Now you can't have a percentage of a candle, so we're going to just round that up to whatever that number is, round it up, so 6. Usually goes up for 6 candles. However, we've currently been going up for 28 candles. So not very good at maths, but I'm thinking that's 4 and a bit times, I think. 4 and a bit times longer than is usual. If it's 4 and a bit times longer than what is usual, every day it goes past what's usual, the less likely it is to happen. The more likely we are to see it contract back on itself. However, we do see that we have buyers, big stacks of buyers underneath us that are keeping price there, that are pushing price up currently. So we do still have probability up. We do have buyers beneath us helping, but we're very overextended. Now, depending on your rules, and you would have rules on this that vary, and the reason that it varies is because you might be somebody that says, I don't care what the sustainability says, as long as I've still got probability, which is what the auto climate tells me, I'll still place a trade. You will end up in more trades, but also you'll have a more than likely lower probability rate, meaning more of your trades will lose than somebody who says, if that's 6, then I don't place a trade if this number is any more than 6. So that person is going to have less trades because they're more strict on their rules. They might miss out on everything from here, in this case, right? Everything from here. They might have missed out on trades that took advantage of that. But they're also less likely to have losing trades. So it depends on your rules as to whether we place this trade. To be honest, I'm not sure we have things lining up anyway to be able to place this trade in the first place. Kind of redundant anyway. There's nothing lining up. But even if there was, depends on you as a trader as to whether or not you would actually place it because we are so far overextended. Hopefully that made sense. If you have questions on auto climate and things like that and what I've just said, by all means, email me, post the questions on tradewithufos.com/Becky, and I'm always happy to help and clarify and give you some more examples. So we've looked at each of these now, each of these that have showed us where we have, or that have shown us where we have probabilities. We've exhausted them for the daily climates on cross pairs. We've exhausted them for our US dollar major pairs. We're now going to come down to a 240-minute on our cross pairs, and all we're looking at here is actually the same market we just looked at, pound New Zealand, just on different time frames. So let's bring this up. So we'd have 240 on the left, and therefore normally 21 minutes on the right. Now, firstly, okay, we have a trade here, but I don't think it's going to work out, and let me tell you why. Yeah, okay, so I'm just going to draw this out so you can see it. So our entry would be 5.7. Our stop loss would end up being 92, so it probably end up being 0.99. It would be. Hold on, give me a second. It would actually be that. So I'm just doing maths real quickly in my head. Okay, so this would become our entry, and this would become our stop. Remember what we talked about before of risk versus reward? Just been executed on a couple of trades, so at least we know we've got something to look at next time. Great, so that was the dollar Canadian by the looks of it. Okay, and Canadian yen. So the Canadian dollar's done some moving today. It's had some movement, which has now triggered us into these trades. So back to what we were looking at here. We have a trade that lines up in terms of, we have a thick red dot, we have our EMA within our UFOs, happy days, tick, tick, tick. However, what is not being ticked or not being checked on our checklist is the fact that we don't have room for us to take profit here. Our risk will be this wide, which means we want our reward to be at least that wide. But our final target is going to go right here. And again, that then means our risk is greater than our reward. If our risk is greater than our reward, there's no point taking the trade. We'd have to be right a lot more often in order to make anything really out of that. So with that in mind, nothing to trade here on this time frame. Let's go back to TradingView, see if anything new has cropped up that we should be looking at. Nothing that we can see here on any of our time frames. So that brings us, we've got 8 or so minutes left. So what I'll do is just take a second to just explain the process, start to finish, that hopefully gives context to what we're doing in terms of our trading. What we do here and the process applies to everything that we trade. Stocks, Forex, cryptocurrencies. In fact, I'll tell you what, let's load a cryptocurrency so I can make a point. Just gone Litecoin. Doesn't matter. It doesn't matter what market we look at. The structure stays the same. So if this was an example, in fact, we might even use this as an example to trade. Let's go to a bigger time frame. In fact, if it were me, I would actually use weeklies, but we don't have confirmed probability there. I say that if it were me, I'd use weeklies because I think that cryptocurrencies are quite volatile, so you want to give it a bit more room. So this is an example where we would actually place a trade. So let me take it down step by step as to why we would place this trade, and then we'll close with placing this trade. So let me scroll down here and we'll do it step by step. First things first when we trade is, are we buying or selling? Or should we even be trading this? Our AutoClimate answers that question. In this case, we'd have a thick red dot, therefore probability is down, therefore we look to sell. That doesn't mean we just click sell at whatever the price is now and hope for the best. We need to be more structured around it, being able to define exactly where we sell and exactly where we buy if we're wrong, exactly where we buy if we're right, and adding probabilities to this. All AutoClimate is doing is giving us a direction. Everything else still needs to be layered on top. But at least we have the direction, and that needs to come first. So probability down, we look to sell. If nothing else were to line up, then we wouldn't place a trade. We still need other things to line up, but at least we've got the first thing first. We're looking to sell. Now, when we're selling, we want to make sure that we sell with lots of other sellers. That's where we use AutoUFOs. They show us where sellers are and where buyers are. Why is that useful? Sellers push price down, buyers push price up. So if we know where the sellers are and we know we should be selling, then we sell with them because they're more likely to push price down. So it gives us a place that's more specific as to where we should be selling from, not just pressing sell at whatever the price happens to be right now. However, that's not necessarily good enough. It can be. There are definitely people that wouldn't use the EMA and just go with that. But the issue is that you could end up placing many different trades when one of them would end up with more probability. So it's like, why waste your money? Why waste your time if you can add an extra layer in here? That extra layer comes from the EMA price. EMA price, which in this case is this blue line that's moving through price, as we see there. Didn't trace it very well, but it's this blue line. There you go. That's moving through price. Gives us the current price of the EMA right now, which is 141.91 at the moment. Now, with this, the EMA price is relevant only because lots of people around the world, not just individual traders, retail traders, but institutions, hedge funds and things like that, will sell at the EMA if the EMA is above price. If the EMA is below price, they'll buy it there. So picture our EMA with a red line, and we'll picture current price with our pink line. If the EMA is above current price and price moves up and hits it, people sell. If the EMA is below current price and price moves down to hit it, people buy. So what we know is, as price comes up, if price comes up and hits this EMA line, various people around the world, for different reasons, will be clicking sell. If that also coincides with our UFO, then you've got sellers that are coming in at the same time that we already have other sellers in the context of an environment where we have probability down. We've now got three things telling us selling is probably the better thing to do. You might even overlay even more things on top of this, more indicators, fundamentals, whatever, that also give you better probabilities. So if we're taking this as our area here, which we will, our entry price will be 141.33, and we get that because that's what AutoUFOs are telling us. Between these prices are where we have the sellers. So we want to make sure that we sell where the first seller is found, which is 141.33. Our stop loss will be 143. In this case, it will be 143.14. And that is because we have taken this number, which is 143.07, and we've added 7 pips worth. So 7 of the smallest increment in price as a little bit of wiggle room. 5 for wiggle room, 2 for the spread. Saying that, we're looking at a cryptocurrency right now. So the difference, the only difference between Forex and cryptocurrencies in terms of the process we use to decide what and how we trade it, I would personally say give cryptos more room. Why? Because they're 10 times more volatile. They move around a lot more, which means that you're more likely to be stopped out and then it still go in your favor. So I'd rather give it a little bit of room. For me, I'm going to round that right the way to its closest 100, 144, just to really give it some room. It also happens to be on top of this pivot, which we can see here, which is also kind of helpful. So that's our entry to stop. Our targets, we have 2 targets. Target 1 is always 1 to 1 away. Target 2 is going to be the opposite of what we're doing. Meaning, if we're selling, the only thing that can stop these sellers are buyers, lots of them. Where are the closest stack of lots of buyers? Down here at 85. Very big gap down there. So our second target, we're going to do 85 plus a little bit. I'm going to make that 85.10. In Forex, it would be 85.02, but again, I want to give it a little bit more room, a little bit more wiggle. Now, our first target will be 1 to 1 away. This is quite far away, which means likelihood is something will change by the time it gets there. It might be that we get triggered into this trade hits our entry, comes along the way, and then starts to change direction. And then we might get out somewhere here. But we'll hold out. We'll have our target down here just in case, but we'll manage our trade as we need to. So the entry is 141.33. Our stop loss is going to be 144. We'll risk $50, same as any other trade. The amount of pips in this case, 267, which makes our first target 138.66. That's our first target, so we'll place that. Our second target is all the way down here at 85.10, which means if we're right, we'd make over $1,000 on that half of the trade. It'd be great to be right to that extent, but it's unlikely that nothing will change by then. So placed 19th of January 2022. We are in a live session. It is 1 day and 55 minutes. Okay, so we have now placed 5 trades today, I think. 5 trades. Hopefully that was helpful. Hopefully it gave you some something to think about, some guidance as to what you might do in your trading. Ultimately, it's up to you to decide. You might watch this and think, makes sense, but I want to add this or I take that out. Fine. You might be thinking, I don't do this at all, but at least it's helpful to use AutoClimate. Great. You might do this exactly as we do it. That's great too. Ultimately, it's your choice as a trader to decide what's going to work better for you. Just going to enter this into my section, and then I will show you where you can go for questions in case you missed it at the start. You can always email me. My email will bring it up in a second. The reason why I'd prefer it that you post the questions in a public space, because that's better for the whole community. But if you have questions, let me just bring this up here. My email address is becky@traddictiv.com, which is there, becky@traddictiv.com. And the link you can go to in order to ask questions publicly, which is then good for the entire community, is tradewithufos.com/Becky. You can log in here, post questions in here. I answer them here, and we can all learn from here. You can also get different apps and platforms, and you can book one-on-one coaching if you want from this link as well. So I will love you and leave you guys. Thank you for joining me today. If you're watching recorded, thank you for watching this and for getting to the end. Any questions, you know where to go, and I will see you next time. Take care. Bye-bye.